morning and welcome to the Haven Financial Group radio show. I'm Larry Kolvig, founder and CEO of the Haven Financial Group. Merry Christmas and happy holidays, and thanks for listening this morning. Kim, we got a lot to talk about. We also got Kyle Thomas, certified financial planner on the Haven investment team, with us today as well. And how you doing today?
I'm very good, thank you. I'm really terrific. Can't believe that it's gotten to be winter so quickly. Boy, didn't it happen fast?
Yeah, we got a winter wonderland here in Minnesota. We've been spoiled 2 years in a row, and let's just say we're really getting winter this year.
And getting it early, which I'm wondering if that means getting it early and lasting a long time. I guess
I'm
time will
afraid that
tell.
could be, but we'll see what happens.
We got a great show today, and I'm looking forward to this because I think this is such an important subject for so many people. We're going to talk about your home and what your home means to your financial future, what it means to your retirement. We're going to talk a little bit about updating you on the housing market, which has been certainly in turmoil over the last couple of years, but seems to be stabilizing some. And I'll look forward to hearing what Larry and Kyle have to say about that. Retirement tips for empty nesters. We're also going to talk about property values and are you actually valuing your property at the right level, and maybe some of the tips that you need to keep in mind. And then finally, transferring your wealth to the next generation, which frequently is a transfer that comes through real estate and through your home. And I think sometimes people forget that that's a big part of the transfer that you make. So it's going to be a great show. So let's get started, shall we? Reminding everybody that 612-504-8400 is how you get hold of the folks at Haven Financial Group. And if you hear things this morning you have some questions about, or if you'd like to just sit down and talk to the experts there about your retirement plan, give them a call, 612-504-8400. Larry, a lot of people, their home is a really complex part of their retirement. It's someplace that they love to be, but might be an investment they plan to cash in, might be something they want to hold on to and trying to figure out how to do so. It can be very complex.
It can be. We certainly include it in our retirement financial planning. However, we got to live somewhere. So when we built out plans for folks, we don't necessarily include the home as far as their investable assets because you got to live somewhere. But let's face it, the affordability factor with housing, the interest rate environment, it changed from a few years ago where we got spoiled at 2 to 3% interest rates, and then all of a sudden it spiked to 7.5+%, and inventory is coming up, but prices go up, and the prices are high. And just this past week, I forget who it was. They said we're going to have a real estate redo or something like that here coming in 2026. So we'll see what happens. But certainly the house is a main thing. And when we visit with people, that are getting close to retirement, a common conversation we have is, my knees aren't so good anymore. We're looking for one level living. And that's hard to come by these days. And people are kind of house locked because they can't get the same house for the same value as they currently have. So it certainly has been a predicament that people have been in here in the last couple of years.
Yeah, absolutely. Well, Kyle, let's talk a little bit about the housing market as it stands right now, and maybe step through some elements of the housing market that have either changed or you anticipate might change here in the near future. The fact of the matter is, we went from really low mortgage rates to really high mortgage rates, and it seemed to happen very quickly. Larry touched on rather the affordability issue, but let's talk about mortgage rates and where we stand right now, what you think 2026 might bring.
Yeah, absolutely. Well, right now, overall, the national real estate market is pretty balanced. Going forward, I would expect affordability to slightly increase, meaning more affordable in terms of prices for buyers, just because of the potentially easing of mortgage rates. We have seen them kind of slowly start to trend downwards, which increases buying power for buyers as well. So and there is a growing inventory as well, which can, if there's more supply, then that creates a shift more towards the buyers in terms of negotiating power and all of that. So I do see potential for a good buyer's market with the next few years in mind ahead for us, especially if those interest rates can start to come down even further, like we're expecting, for December here this month. So
Mhm.
definitely it could be good times for buying. We're not going to get down to the rates that we had a couple of years ago. I don't think, we'll see that for a long time if we ever see it again. But we should settle in here with a modest interest rate environment for mortgages.
Mhm. You say that it's going to be a buyer's market. It certainly has been the seller's market for the last couple of years. I don't know if either of you have, witnessed the open houses and lines down the street of people trying to get in to see houses. Obviously, because there was so little inventory on the market, which was very much related to the combination of mortgage rates, because people not wanting to give up their low rate, obviously, and the lack of houses on the market. That just it's been pretty tough.
Yeah, existing home sales remain historically low. However, they are projected to rise. The rental market, I just had somebody in last week that was renting, and man, I was surprised. I guess I'm so far removed from the cost of rent, the rental
Hmm.
market, but man, to rent an apartment here in the Twin Cities I had no idea it was that expensive. So, we're expected to see a little bit of ease come in 2026 with about a 1% national rent decrease. But it all comes down to money. And, we're in the retirement planning business, and housing is a big part of it. The investment discussion is a part of it. We like to look at it big picture, because all of this is involved in your retirement planning process. Yes, housing is, but also your investment and all the other things we do at Haven Financial Group. And again, we do give our advice. For 25 years, I've had a real estate license. I don't practice anymore. I certainly don't have enough time to practice, and certainly have clients that I refer to that are active in the real estate industry. But it's been tough, but I think it's going to change over time. But I guess we got spoiled by those interest rates. And, when I see somebody come in and, I'm a big advocate of paying off your mortgage in retirement if possible. But when I see folks have 2 to 3% mortgage rates, it's like that's really cheap money. I still encourage it, but let's not beat ourselves up over a little mortgage with 2 to 3%. So
Sure, absolutely. Well, let's talk about how this relates to retirement, because the issue really for a lot of retirees is that they've been, you mentioned this earlier, Larry, but they've been sort of stuck. There's nowhere to go. They don't want to give up that low interest rate for, to trade their house and go maybe to a smaller property at 9%, which is where it was there for a while. We're down around six, 5.5 probably in 26, but this has been tough for retirees to make these kinds of decisions.
Yeah, it really is tough because a lot of retirees want to go to maybe a Rambler type of house where it's something that they can live in for the next 30 years and have in-home care if they ever come to that kind of need. Then that way you don't have to move ever again. You can have single level living. But if you're coming from a place that has a 2 or 3% interest rate, it's really hard to sell that and give up on that. And I know the administration is talking about assuming, current mortgage rates or loans that you already have. Who knows if that's ever going to come into play? But that would change the game quite a bit, because if you could actually move your current mortgage into a new place, then that whole problem goes away right there. So, but yeah, I mean it's definitely a question for people, and if these rates come down, that'll make it less of a burden. But it's still going to be something that we're probably never going to really be able to get down to those rates again.
Mhm.
One thing I will say though is that the administration is also trying to push for a 50-year mortgage that could you're not necessarily shortening the time horizon of your loan that you would have, but it's trying to make things more affordable for people,
Mhm.
because house prices haven't been affordable for a little while now. And it's really hard for people to buy houses. And if you get a 50-year mortgage, you're not going to be in that house for 50 years, right? It's more of just that affordability factor.
Sure.
So there is ways to try and move if you have to, and keep it affordable. But it's definitely, I don't want to give up a 3% mortgage, right? So yeah, it's definitely
Absolutely.
a question on just figure out what the payments are that you're going to be having, and just look at what's best for you long term, not necessarily looking at the only the financial aspect of it.
Mhm. Well, we wanted to get this show started by just talking about the real estate market as a whole. And certainly, the real estate market has surprised us all over and over again in these last couple of years. But to just sort of sum it up, right now it does seem like it's balanced, and it does appear that 2026 is going to be a better year for the real estate market. So, having said that, we're going to bring that back to what this means for retirees. So, when we come back, we want to talk about retirement tips for empty nesters. Empty nesting is a big part of why a lot of people do sell their homes or are interested in doing so. And we'll talk more about that. The number is 612-504-8400. If you've got a question or if you'd like to chat with the folks there at Haven Financial Group, we may be hitting something that you really have had some questions about and you'd like some further discussion. Please feel free to call 612-504-8400. When we come back, empty nesters. This is the Haven Financial Corporation.